So what's this new mortgage tax that's getting all the buzz? Well, it's not new. We brought it to your attention back in January when the conventional loan agencies first announced it. But essentially, Freddie Mac and Fannie Mae, the two conventional loan agencies, are now charging higher fees and higher costs to buyers that had a higher credit score but just a lesser down payment than they were previous to this May 1st change. On a positive, they are taking some of those adjusters away for lower credit scores, therefore making it a little bit less expensive for those with a credit blemish on there to be able to get approved. But essentially, what they're doing is they're taking that risk and they're now applying it to their sweet spot where they found that most buyers were, and essentially charging you a higher cost to essentially make up for what may happen on the delinquency side. So if you look behind me, I've got both the purchase and the refinance loan level price adjustments. So you'll see right in this kind of sweet spot in the middle there, where that red is, that's where you're now paying a higher cost than you were previously. And you can see on here, people with good credit score, 720, 740, are now going to be paying a higher cost than somebody, at a 660, 640. Now, let's make sure we understand this correctly. This doesn't mean that you should tank your credit and you're going to get a lower mortgage rate because of it. No, what it actually means is they're just not penalizing the lower credit scores as much as they were previously. It still makes a lot more sense to have a good credit score than it does to have a poor one. So make sure you don't miss that misconception because you do want to still keep your credit in the best possible place. So I wanted to point this out. You'll notice on the refinances up here that they're also making those more expensive. They, of course, know that rates are elevated right now, and with inflation coming down, those rates are going to start coming down as well. So that means refinances, bringing your high payment, high interest rate down to a more manageable point. And unfortunately, we're now going to need to make sure that we get it even further to make sure we can get that savings, since now they're going to charge you an extra fee to do a refinance, especially if you're falling in this sweet spot again. So where are you going to see this? You're going to see this in the interest rate and the fees that you pay. So, it's going to be one of those things where you're going to want to work with an experienced loan officer so they can look at different scenarios, maybe putting less money down, maybe putting more money down, just kind of going through some of those scenarios to see if they can maybe find some of these adjusters or the sweet spots to avoid some of those for you. Please reach out if I can help. Thanks again for tuning in.